A trader and you don't understand how to use the risk reward ratio, stay tuned to this video is over. All right. And don't forget to subscribe to my channel, like and share to your friends to learn how to use the risk reward ratio as well. All right. So I'll be diving in more by discussing what a risk reward ratio is. So what is risk reward ratio? Risk reward ratio is a key concept that helps traders measure potential profit compared to potential losses before entering a trade. And it shows how much you are risking to gain a certain reward. So I'll be diving in more by showing you the formulas you have to use to calculate your risk reward ratio so that you know how to use it more perfectly. All right. So the formula you have to use to calculate your risk reward ratio is uh is your potential losses divided by your potential profit. So this is the formula you can use to calculate your risk reward ratio. And I will dive in more by telling you why risk reward ratio matters in trading and how you can calculate it. Like this reward ratio, how you can use this formula to calculate and get your risk reward ratio. And the good risk reward ratio practice you have to make use of is whether it's the 1 to 1, 1 to 2, 1 to 3, or more. All right. So stay tuned to this video is over. Okay. So and if you are if you want to calculate the risk reward ratio, simple way, I'll start by calculating. If you want to calculate the risk reward ratio and get how to use your risk reward ratio. Okay, let's say you entered a trade at 1 to 2,000. Let's say you entered a trade at 1 to 2,000 and your stop loss is 1 to 1,950 and your stop loss is at 1 to 1,950 and you're having your TP target as 1 to 200. All right. So, sorry, 1 to 2,100 naira, 100 pips. This 1 to 2,000, this 2,000 pips, 1 to 950 pips, and 1 to 2,100 pips. All right. So, and this is the your tip entry position. This is your stop loss, and this is your target. Okay. So, and we'll be diving in more by calculating your stop loss and your potential profit. So, we'll be calculating our potential stop loss and our potential stop profit with this our stop loss and TP target digits that we have. So calculating your potential stop loss will be starting by then calculating our potential stop loss because it's the first one here is by using your entry to minus your so is by using your entry to minus your stop loss. We're having entry at 1 to 2,000 and then we're minusing it by 1 to 950. So 1 to 1950. So we are minusing it by 1 to 1950. Automatically, we are having a pip value of 50 pips. So automatically we're having p-value of 50 pips. So now we have gotten our potential stop loss at 50 pips. So we'll be calculating for our potential profit. So, and how we can get our potential profit? We're going to be minusing our targets by our entry. All right, we're having our target at 1 to 2,100 and then we'll be minusing it by 1 to 2,000. So automatically we are having a p value of 100. So we're having p value of 100 pips. So automatically we're having p value of 100 pips. So this we are now having 50 as our losses and we're having 100 as our profits. So now we'll be calculating it with this formula that is here. by inputting the formula RRR is equals to, we're having our potential profit as 50, and then we're going to be dividing it by 100. So this is the ratio that we're having here, which automatically give us which is equals to 1 to 2. So automatically it's giving us 1 to 2, or we can automatically give us in a ratio form of 1 to 2 ratio. So now we have gotten our 1 to 2 ratio. This is the simple formula you can use to calculate your risk reward ratio and know to calculate your stop loss and your TP target, your entry to your stop loss target, to know how much risk reward ratio you are taking and how much you are risking. So for those of us that are new and don't know how to find it, look at this by your left, at the edge by your left, count 1, 2, 3, 4, 5. The fifth one, click by the side, the icon. You can find it here. We have the long positions, we have the short position. So the long position is for the buying opportunity, which we have here. And for the short position, it's our selling opportunity, which we have here. Having our selling, our stop loss up, and buying opportunity, having our stop loss down. So this is the way you can find it. So I'll be diving in more by telling you why risk reward ratio matters. So why did this risk reward ratio actually matters? Why are we considering it before taking a trade? Because it will help you to decide if a trade is worth taking, and it will protect your account from low probability setups. It will also keep you focused on high risk reward and low risk reward trades. Okay, so it's going to this is why it matters in trading. It will help you to decide if a trade is worth taking, and it will help you to protect your account from low probability setups. The third, it gives you focus on high probability, low risk trades. Okay, so and I'll be diving in more by giving you the good risk reward ratio practice that we have in trading. So stay tuned. This reward ratio is going to tell you whether you have to use one to one risk reward ratio is actually perfect for you or not. 1 to 2 risk reward ratio is actually perfect for you or not. 1 to 3 risk reward ratio, 1 to 4, 5 or more risk reward ratio is actually good for you or not. All right, so don't forget to subscribe to the channel to get more of my tutorial videos. All right, so and we'll be diving in more by discussing the good risk reward ratio practice. So the good risk reward ratio practice I have here, which is your RRR and the interpretations that I have here. For the 1 to 1 risk reward ratio is mainly for the break-even setups and is only good with high win rates. So it's good with high win rates. And 1 to 2 risk reward ratio, minimum people use it, this minimum preferred, and it's common among the profitable traders. While the 1 to 3 or more risk reward ratio, your strategy guys have a very good setup, a very strong setup to ride this 1 to 3 risk reward ratio. If your strategy doesn't have a very strong setup, I don't advise you should go for the 1 to 3 risk reward ratio or more. So just go to your 1 to 1 risk reward ratio or 1 to 2 risk reward ratio and you remain profitable. All right. So it will, and the 1 to 3 risk reward ratio, it will give you more rooms to winning. If you get your TP, you win a lot, and it will also give you more rooms for fake outs and then losses as well. Because price, let's say you're targeting 1 to 4, 1 to 3 risk reward ratio. Let's say you're targeting 1 to 3 risk reward ratio. This is automatically 1 to 3 risk reward ratio. This is automatically 1 to 3 risk reward ratio. You can find it here, 1 to 3 risk reward ratio. And you notice you figure out price came down and then came up again, came down. You were massively in profit. It didn't, as it gave you up to 1 to 2 plus profit, almost your TP target, and actually made this and then pull back up again. You actually thought it's going to reverse. What happened? Price will continuously change in direction and smash you out. So you'll be prone to many of these this kind of things. All right. So as a newbie, I would advise you should stick to 1 to 1 or 1 to 2 risk reward ratio. It will help you in becoming profitable and sticking and being disciplined. All right. So this is it, guys. Don't forget to subscribe, share to your friends. Okay. Take care and bye for now.